Assalamu alaikum, bitches. This is your new Supreme Leader speaking. It's time to open the fucking straight, you crazy bastards, or you'll be living in hell, believe me. If you don't open the straight by Tuesday, I will put a missile so far up your ass, you'll be farting mushroom clouds by Wednesday. So, anyway, open the straight, which, when you think about it, is not that straight. I think we should rename it The Weave. The Weave of America. Nobody does the weave better than me. I always bring it back perfectly. Just like I'll be bringing you back to the friggin' Stone Age if you don't open the straight by motherfucking Tuesday. Comprende, Abdul? Anyway, thank you for your attention to this matter. Toodles, losers.
Yep, that's the way our president talks, and that's like, wow. Anyway, you see this little girl right here? She's having an absolutely fantastic time while her country is being bombed. uh, Absolutely incredible. But that's kids for you. They don't care. She just wants to be on the swing and having fun and playing, while her parents are probably watching terrified. Um, but that's what's going on right now. That's our world, and it's going to get interesting geopolitically this week, as you know, because of the threats that Trump has made. Anyway, hopefully this will be resolved shortly, and life can come back to somewhat normal. Nah, everything's just crazy. Anyway, enjoy the video. It's purely educational, and I'm sure you will enjoy it. There's not really much going on as far as price goes. I'm focusing on silver right here because I'm going to go and talk about Fibonacci's. I'm going to talk about a little bit about price action and support resistance and just statistics of how you set up buying and selling areas. Now, one of the things that you're seeing right here are the butterflies that I have on the charts. Now, there are different patterns that could show themselves. Some are diamonds. Sometimes you get flag patterns. It changes. It's kind of like a dance. So you have different dances. You have the tango or the waltz or who knows, the jigaboo. It doesn't matter. It can be all different types of dances, and you have to look at what the price is doing and try to get into alignment with that. So whatever the times are, they will change. And the first thing I'm going to show you is how I go about looking at the patterns and what they encompass. And it's usually multiples, and this is something that happens in nature with growth and decline. It's something that is observable throughout time, and it happens quite a bit. Here, let's go here, and it dictates to how I trade. And now I'm going to go over and show you silver here, and silver. Interestingly enough, if we remember all the way back down here where we had this original W that I drew, the key elements of what I use for fibs, inside 100%, right here, this is what I want you to focus on. As you see right there, boundaries of this from the top to bottom. You have your 1 to 2. This is what makes up the basis of your patterns. And on W's, for example, this is where it originates. It's where the starting point, basically. And the starting point here is this high right here is what I've focused on. And then this low right there. And then your 2. Now, the interesting thing about W's is sometimes they will reach all the way up to the prior 1, the where it starts, and it happened in this case, and then drops, and the pullbacks on these are usually between 50 and 61. You can even go up to 70% and lower, but usually within those bounds, and that creates this. This is 3, 4, and then you have it going all the way up. You're looking for your point, your fifth wave point. And this one, as you've seen, turned into a parabolic extreme. This is one of the things that we cannot predict. And I'm not, into predicting. I can predict where support, and I can predict the targets because that's what's already laid out. So this target right down here on silver is still in play, right? Because we've never traded all the way back down to here. But at the same time, we have other butterflies that have shown up here. So as we go into this chart here, if you remember throughout previous videos, I started shorting right around just under 64. This was the starting point, okay? And the reason why is because it created this butterfly, the 1, 2, 3, 4, and I was looking for a 5 that started anywhere from here. But it exaggerated, and it exaggerated greatly, and it created multiple patterns. This is something that does happen, especially on parabolic extremes. But this is no longer in the realm of normality. If we go back in the chart, we can see, let's go to a daily, that the ranges that this was adhering to, like in the past, even though you might have the extreme where it went all the way down to the $11 range here on silver, if you remember. And this was my boundary, the 28, close to $30 range. And then we had the bigger move up, but all of this stayed within a relatively understandable amount. And then it went all the way up to the 40s and 50s. These were all targets that I had above from under here. And when we hit the bull market time that I stated, and that was right in the low $20 range. Now all of this makes sense, but when you get a parabolic move that goes all the way up to 120s, and it does it within a very short period of time, then the chart becomes unstable, and you get like for like price action. That's one of the things that you'll see me go on about, is like for like price action. And this is one of the reasons I'm not somebody who puts a lot of money into shorts, because I've seen it go extremes, ridiculous amounts. But I've also seen it reverse back down to ridiculous amounts too, like we will see with silver. Breaks its range, goes up crazy amounts, goes up to the 50s, creates the pullback over here to the mid 40s, and then this one back to 48, and has structure. The main thing is that I have structure on this. So I have my 1 and 2, and from here I can go over and look for where I'm going to start selling. And once I get to the 172.8 to 200%, that is where I want to become a seller, and that's why I sold right around 64, right over here. And if you go into the short-term patterns, you can usually see divergences or starting points of that. Now, I averaged into this bit by bit by bit by bit, all the way as it went all the way up here, because I was confident in time that we would trade all the way back down to and under, and ultimately down to this 48, which I'm still confident we will. So we had that structure right there. So that's the first butterfly. And I could even elongate this arm and go all the way up here to go over and encapsulate that. But another structure came into place on this. And we'll go back to the 4-hour. And you can see this one right here also did similar like pattern, almost exact. This structure right here repeated itself on this right here. If you look at the dimensions and the percentages, they were almost exactly repeated on a percentage basis. So you have this structure right here. So boom, you had it go all the way up again. I'm selling all the way into here. I am a seller, and then we get where it just drops straight through the floor, goes down to the 70s, and I become a buyer. Now, why did I become a buyer? Well, I was able to see a diamond pattern appear right here. You have to really zoom in to see that. This was a short-term pattern, and I like the structure of this right here. This is why I started buying in the 70 range. On the flip side, has nothing to do with my shorts. I can go over and start covering them, but I started building a long position from here based off of this first diamond pattern, which also, incidentally, had a bullish butterfly pattern right here that it created before it created the diamond pattern. So you have confluences of two different things. That gave me a target that goes all the way back to 101, which we came very close to, and one person was able to get out of, and the 96 where there was a spike up to here in odd hours in the aftermarkets. So could you count that? You could kind of, but it's not something that I would do. That leaves gaps in the chart and it leaves it unsettled. So that creates a kind of a conundrum. Some traders that I've known that follow methodologies like mine, they would exit the trade in the 90s simply because it was proximity. And I could get that, but I kept trading. And even though I sold here, these are just hedges against my long position to take advantage of what I thought were short-term buying and selling opportunities. And sure enough, I was able to get a lot of trades off of this. And that's, again, this goes back to the algos telling me, trade more, use more capital towards other assets like silver, and to basically take shorter term trades because you're going to get a lot of volatility. And sure enough, we did get a lot of volatility. So what you're seeing is me listening to the math of the markets, basically, because the structures have changed. Whereas in the past, like with Bitcoin, I was holding too much on the long side, so I wasn't hedging as much, and that cost me, especially when I missed that 98 K move, because I was looking for 98, the upper 98 to hit exact. Sometimes you miss trades; it just happens. But the idea is to capture the structures. So now going back to the confluence of the fibs, you know that I use 172.8 and 200%. Those are key levels, especially the 200%, because this is your major area right here. Whenever you have doubling of something, think of mitosis, where things split apart and double. And that's on a cellular level that happens. And that's the basis of the math that I use. So up to here, we had this. Now, the next level up, and you'll see this when you're dealing with the 72.8%, this is your zone, let's call it, okay? This is where things are changing, they're active. Just like on the cellular level, these statistics will come out in biology even. So it's no different when it happens in price action. It shows up here as well, and statistically. That's why I use the 72.8 to 200%. This is a zone. Think of it that way. Now from there, if you just use the simple math of 200% doubled again, would be the 4, right? But you're taking into consideration this is how you get your 4.23. And this is just something that happens naturally in price action, and always has. And then from here, it's multiplied. This is where you have your parabolic. And this is kind of a rare one to use. You've got your 8 above here, and that's just doubling again. And you get an extreme basis off of this. And these are the key ones. 4.23 is a very high-end extreme. You can see I sold some right there. For it to go all the way up here was just crazy. But that's not something, when it becomes parabolic, you can't really, it becomes extreme, it does crazy things, and you can only focus on the numbers that you have on this chart right here that go all the way back down to these levels. Now, this level down here was likely going to become support. So this zone, this 65.90s all the way to the 63.14 is its support zone. And this is where I started hedging. It was just around 64. All of this made sense to me, and that's what that's based off of as far as the fibs go. So you can see the extensions that I use and how I use them and what it's based off of. It's based off of nature. It's natural math, basically. So that is the key idea behind that. And you could also see the patterns that I use to go over and focus on. So I had these patterns, repeating patterns. Even if the arcs are different and the tempo and the ranges are different, they still exist in the symmetry and the overall geometry. And it gives me a basis of which to trade off of. So I'm using good logic. I'm not just doing this and choosing based off of emotions and so forth. I'm putting logic and going into the math of what I see happening before me, and trading what's there. And when you do that, you get good trades over time. You just do. And if we go through this chart, we can see that happening. Even though I had this extreme move where I'm selling into all of this and averaging up. And of course, I don't over leverage, or else I would get blown out if I did. And I've seen this many times where it goes far beyond what I was looking for. I was thinking this was going to, at the most, get up to here. And this made sense. But for it to go all the way to the 120s, that's just insane. So this is a good reason why I don't use a lot of leverage on shorts. But anyway, so we see the structures that we had, and we see the ranges that come back into here. Now this is an extreme, and where do you find support? You find it all the way between here and there. And did we find support between there and there? Yes, we did. With this spike down that went all the way down here, that I was buying into from the low 70s, right here, the mid 70s, the low 70s. Everything is based off of what I'm seeing in front of me. From this butterfly up here and this diamond right here, I am trading against everything there that I'm seeing. So this was my first buy zone right here. This indeed became support at this 200, the previous 200 and 172.8. That was the zone for support. Now, I could also go into the chart right here and see this was resistance areas right here that were drawn visually. And you can go into it. Kind of like if you've seen pivot, resistance pivots that I draw on the chart sometimes. I'll put them in circles and to point them out to you, like this one right here. This is a pivot. This is what I went off of right here to go over and decide to short hedge against my trade, of which I'm probably going to be taken out of. If this goes above this point right here, above 74, I will collapse that short. It's not trading in my favor. Unlike these other trades that all traded in my favor, I had this one targeting this one right down here, which is based off of this for support. But it never got there. And if it trades back above this 2 or above the level, I will exit that short that I currently have. And that's just a hedge, because I'm mostly long silver, as you know, because I'm looking at this bigger pattern. But I do hedge against my positions to get basically extra money to increase, based on the volatility. The trades basically pay you. But you understand that logic. So this is the pivot R that I have right here. And you will see that this, if you go back into this right here, this would become, instead of a R pivot, would become a support, a pivot S, a pivot support. And that's based off of where we had extremes and where we had the ending of this structure right here. So that 200 to 172.8 has a confluence that goes with this structure right here. So you understand the logic right there. I'm not only trading visually what you see in the charts for its geometric and the ranges of support and resistance. I am confluencing it with structures and with the fibs and the percentages to just give me a good solid logic is basically what it is. And by doing that, you can create trading maps, and you're building a plan, and that's one of the key pillars of trading is to build a plan, a trading plan. So that you're trading what you see. You're trading what's there in the chart. This is what helps eliminate emotions in trading. When you're trading a plan and you're trading what you see, you're not freaking out. I'm not freaking out when these numbers are going all the way up over here. That's just the extreme of the marketplace. I don't feel anything. I have a plan, and I'm trading and saying what is everything in here. And when you get these pullbacks where it goes all the way down to here, and I start buying, I start getting long all the way down into here, am I freaking out or anything? No, I've got a plan. I've got structures, I've got percentages, and I have support and resistance, and I know what I'm looking at. So it builds a total picture. And that's very important to do because there is no emotion in trading. The only emotions that come for people are when they're influencing their mind and their mindset into the charts that has nothing to do with what the charts are doing. It's a distraction. You're making up something in your mind. It's like being afraid of something you have no control over and creating it as being something that's much worse than it is, which most people do. When they're afraid of something, then you have to ask yourself why. Why do you feel fear and apprehension? And it's because you're not doing something that's right. It's irrational, and you cannot trade irrationally. People who trade irrationally will over leverage. They'll go for quick, moves, and they won't use stops. If they're over leveraged, the first thing you want to do if you're using a large degree of leverage is have a stop. And let me tell you, that's dangerous in itself because I've seen brokers go over and ignore your stops. They'll close you out of the marketplace, and it'll trade beyond your stop, even if you put it in place, because the brokerage has control of your orders. And that's another dangerous thing. That's why I don't trust many of the brokers that you have out there. So keep that in mind, and that's why I stay away from leverage. And I usually will have a position trading against. Now, in an instance of like silver, if I use a good broker like Interactive and I can trust them, that's fine. But at the same time, again, I'm not going to over leverage. Repeating this over and over to you. Short selling is you can get extremes like this, and you have no way of predicting that you're going to get that kind of price action. That just happens, and it comes out of left field. So once you over leverage, you're setting yourself up for destruction. That's why you will always see my longs being much bigger in size on trades. and because I know what I'm looking at as far as and what my ranges are likely to be, and that's a key element of trading. So anyway, that's philosophical ones. I don't use much on a short, unless for Bitcoin, for example, I already own it. All right, that's the caveat. Is if I already own it, um, then I can hedge against what I own to profit off of. So if we go back to Bitcoin, which I'll do, but my key point is you understand the basis of my fibs and how I use them. Now these are the extensions I'm focusing on. On the inside fibs right here, I will go over those. I'll do that in another video, probably the next week's video, and you'll have a better understanding of how I pinpoint the inside fibs and use them, especially when I'm using early structure, and like patterns like this, how I look at the marketplace. I'll do that in next week's video. But this one I wanted to show you the extensions, and I want you to think of it as kind of like mitosis, where cells are splitting and it goes from 1 to 2, and that's how you get the basis of this. And there is a zone of where the mitosis happens, and this is where you think of it happening before it splits to 200%. It starts to vibrate and to create chaos in this starting right here. And there are statistics that show where some patterns will only go up to 172. They don't all the way go here to split. They fade beforehand. But I'll get into that on other charts. This one is more, it has good geometry and it has good range, and it fits within the boundaries of this. So we saw the support points. You know the logic that I used right here, and you understand the patterns that show up inside of here. Now, because of this, this pattern showing up inside of here, this gives me another target that we have going on right here. And I'm not looking for us to get all the way over here until we get back up to here, up to this $90 range. And we might even go up to this, all the way up to the 101, because we still haven't technically done that. So there are many possibilities in this chart, but I'm trading the ones that make the most sense. And if we were to break this zone right here and go all the way down to here, I would still be buying long, and I might be in from positions that are all the way in the 75 to here. Not going to really lose any money because I've had so many trades. I built up the position, and my cost basis is probably all the way down to here because of the fact that I've traded so much in and out, and trading against myself. Remember, hedge against myself. All these little red dots that you see here, no matter where they were closed, I was trading against what I already owned on the long side from this 75 all the way down to this upper 60, mid 60 range right here. So you have to think of it as that's the logic right there. You're building, because you're building your money. Your money is your army. So I'm building my army right there throughout all of the volatility that we had. And the algos proved to be right. So far we're getting more ranges, and the short-term trading is working out, and it's building my stack, I guess you can say. Now you understand the logic of the fibs right there. I've repeated it over and over. I'll do it again. Next week I'll do the inside fibs. But there's where you see the extensions and what I'm looking at there, and how I also use the patterns, the geometry, and the symmetry of them, and the wave counts, and all of the confluences basically. So there you go. There's what I'm imparting and the logic that I use in there as well. Now, let's go to Bitcoin. Here we go here. This right here, symmetry. Now I'm going to show you right here. Where's the chart that I had? So many. Here we go. I went over and I had to buy Bitcoin. Right here. I had to buy. I was a seller over here. I went over and covered half of this right here, down here. Again, trading. Because now things have reversed. We have a pivot that went boom, 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 and traded back to at and above this last area right here. So this zone right here should have been resistance, but that's no longer resistance. So we broke through. So that's a positive sign for Bitcoin. I can't predict where it's going to go, if it's going to find support here. Off of this range here, you've got different points. Here, here, here. These are, it traded down to this zone. Creates kind of like, if you look at the price action and the structure, kind of like an inverted head and shoulders type of setup. And a 1, 2, 3, 1, 2, 3, and trades back to and above. This is where it would make sense to start to cover and to go to buy more long. Now I am hedged. You know where I'm hedged from around 72. I've had many hedges. I've had many trades. I traded down here. I traded down here. I traded down here. And now I started creating a positive one where I'm mostly long Bitcoin. That's just naturally doing that. But instead of holding larger amounts of shorts, I'm starting to chip away at them. So if we trade past here next, then I will cover more shorts right there and build back the long position. And that's a possibility. But all of that is the structure that you have right there. Now, if we go back in Bitcoin, you can see the logic that I'm using and the extensions that you're using. Now, Bitcoin is different. Bitcoin had a shift. And let's use the extensions right here so you can kind of see that. Okay, this is your 1 and this is your 2. It encapsulates the high and the low. All right, and this is usually based off of, you can see it, the pattern is, this is going to turn out to be more like a flag, right? So let's draw it like this. Sometimes they're flags, sometimes they're pennants. But the structure is the same. This would be red for encapsulation of. So here's your 1 and here's your 2. Now, of course, you can go over and say that in a different way too. You can go over and the high-low, that's relative to the starting of the symmetry. So the starting of the symmetry would be whatever the high is within here. It could be here. They're so close to each other. You can, if I like to use the average of, so I'm averaging out 1, 2, 3. Even though this one might be the higher one, I pick this one back here and I just connect the dots and run them through. And this is the ultimate high, the end point high. That's called the end point. This is your start point. Even though you get a structure like this, and it turns out to be kind of like a flag. And again, this might differentiate. You have some brokers, and this is the interesting thing with brokers, is you have a group of people trading on their platform that might change this number to this number down here because they might have a similar order structure, the brokerage or institution or whoever, that's keeping prices at a certain fixed number basis. And that's just the differentials that you'll get in different platforms and the charts. And that happens a lot too in on different stocks. You can see that. they might use a similar number basis, and I'm looking at through the numbers and the price action again that they use. Um, uh, so it might differentiate. So it happens a lot, especially in crypto, because you have one broker again. Coinbase is going to be different than Bitmine or Binance or whatever, a different broker. But you try to average out what you see from different brokers. So anyway, I connected the dots here that you said, that I said was the starting point and the end point before you get the break. And you can see the break that you had down here. Extremis maximus goes all the way down and goes past the 200% based off of this high low. So you can see how I again look at this marketplace, and when I start buying, I'm buying within this zone right here. This is my zone, and as far as the downside goes, and that could be your short term. And then when we get back up to the previous 127%, here's an interesting point. I haven't brought up the 127% because usually on the 127%, I will fix that based on the tempo of the market and the patterns. This is a good way to use it based off of this pattern up here, end point, start point, your 1 to 0 point, basically, off of the pattern. Goes all the way down to the structure down here, your 172.8 to 200%. This encapsulates the movement of this. Now this created another pattern from here, right? We have another structure that happened. But you're understanding what I'm looking at and how I'm viewing this. Now let's go to a chart. Remember this right here, but let's go to a cleaner chart. And you can see it, maybe not cleaner exact, but you can see the structure that I'm looking at. And you could see the endpoints that I'm looking at. You can see this was your pivot R right here. I pointed that out. I probably put it on a different chart. Which chart did I put that on? I put it on this one. This is your pivot R, again right here. It's like looks like an M, and it has the first low, the second one right down there, encapsulates over here, creates the M structure, then breaks down, and then you get your movement down here. Again, now you have this structure in place, and I drew this with the averages. This makes the most average. Why didn't I use this one? I could use that one, but this right here encapsulates the structure for the symmetry. And I like to do that. I like to try to go with the one that averages out the best looking symmetry in price. And just like here, this structure is more easy to see. And I don't try to be exact. As you'll know, I don't try to do stuff like that. I try to go over and connect the ones that make the most sense. So right now, we're back at the starting point right here. Now this is a warning zone right here. We broke this right here, this 1, 2, 3. We broke above it. So you now have it reversing from here. That's a warning sign if you want to look at price. Somebody was asking me, how do you know when to cover, to start getting long again? This would be one of the signs. And if we broke this up here, that would be another sign. And then ultimately, if we took out these other highs right here, that would be the other sign. This can still fill right here, and we can go down to this number very easily. That's up to the marketplace. But I'm paying attention to what I see in front of me, and I saw this as a break. So that's kind of a warning sign to me. So you have your structure here, and I pointed out, as you've seen, what you're looking at as far as structures and how the confluences go with the extensions on the trades that I get. But those are all important things to look for, and you got to keep them in your mind because it's a lot of variables. I understand it. It can be very confusing. Uh, all the confluences and the numbers and so forth. Next week, I'll go into the 61.8, how I use them. That's an inside number. You have your outside number. Outside numbers are your extensions, basically. So when you go beyond 100%, to a 127 or up to 200% or 172.8%. These are all outside numbers, or 4.23. These are all your extensions. Inside numbers are just inside of 100 to 0, basically, and on and on. So you understand that concept right there. So anyway, I've heard myself talk too much in this video, and I'm tired of my voice. It's longer than I would like it to have been, but you understand the logic that I use, and I pointed that out. Let's go back to these numbers here. You understand how I use these numbers here as boundaries. So I'm watching, from the structures that get pointed out from here, start point, end point. That's your structure that you have right there. Has nothing to do with the count. Your inside count of the structure is 1, 2, 3, and then 4, and then the break. And again, structures can be 4, they can be 5, they can even go up to 6, and break, and then have your percentage moves down. But anyway, from this structure right here to there, this is your focus point down here, and even patterns that happen in here. This whole zone right here is where you could become a buyer, and then you would look to be for structure to build again, like I did. Your M point, which is right here, you can see that on the chart. This one I didn't draw the little circle and pivot, to note it, because I just didn't use it on this one. But it's there. It's right there in front of you. You know what you're looking at. I pointed it out on the chart many times, so it's very educational. I hope you use it, because you'll see at majority of the time these will encapsulate the price, often, and they make sense, right? Especially when they have a lot of you line them up with the volume. I don't have volume on the charts at the moment, because I was using certain instruments that were just getting in my way visually. But if I was to show you the volume, you could see the volume increasing right here, and increasing at different spots to indicate, again, using volume and price action, and the whole scenario of just good logic, support and resistance. These are all the elements, and again, I'll repeat them over and over, and I know it might seem confusing, but when you do this again and again, it just becomes second nature. So when I look at a chart, and I've done it so many times, just like I expect you to do the same thing, I think you can become a better trader than me, just as good, maybe even better. Some people can look at things finite to such a degree and see things that maybe I miss. So never discount yourself having the ability to do what I do. It's not magic, and I'm giving you all the good logic, the basis of this. And it's the marketplace. I enjoy doing it, and that's why I'm good at it, I guess. And I humble myself to the market. I don't go over and tell the market what I think it's going to do, or where the market it's going to go. I'm just trading off of what I see the best I can, basically. So anyway, those are the extensions, and that was the point of this video, and I pointed them out. And on this one right here, on Bitcoin, it's a good way to view points, and this how to put them on a chart. So you see the boundaries here that I drew, and you've seen it going down to this here on the reverse, whereas on silver it was the exact opposite, right? So you have an idea of both positive and negative uh, of how to use those extensions. And the 127, I'll actually, that 127% becomes a good boundary unit on a chart like this on the reverse, because it shows up right here, um, right at the M. So you have a confluence. When you have a confluence like this is where I will add actually more to a trade. So I'll increase my size. That's the other thing I do, is if I have a boundary confluence that I think this will become a higher point of resistance, I will add larger amounts. So my short size would increase. That's something I should state as well. Whereas maybe my sizes are smaller at numbers on a lower end. That's good logic to use, you know. But anyway, you see what I'm looking at? You see how I draw these? And so when you see them on the future videos and you see these fibs that pop up, you have the basis of the logic I use. I pointed out both negative and positive, positive, negative. And so there you go. I hope you found this educational. And yeah, I am tired of hearing myself talk. Bitcoin we're showing positive signs, but still not out of the woods yet. And I've moved money. I've moved money to the sidelines on both Bitcoin and even on silver for money on the sidelines for future trades, because I want to take more trades. We're watching silver to see if we can break above here. This area right here for resistance, if we break above there, I would expect us to bypass this 78 range and to go even higher and to ultimately hit our target up here, of which if we go up to this level up here, I'll be out almost all of my longs. I might keep some for over here. We get up to this level up here, I will start shorting again, so you understand the logic that I'm using. These areas that are target, this would become resistance again, so I'd become a seller above these points here, and I would exit out all of my positions at this level up here and most of it right here at this level right there. So you understand all the logic that I use. Mostly long on silver. The hedges that I have, I might be reversing and be completely long. I still have this one right here, and we'll see. But anyway, that's the market update. So nothing has really changed. Is there any other meta planet? If you want to have, we had this break right here, so I'm expecting this one to go back up to the 213 and above number, and maybe even close this gap. But anyway, I'm very positive on Metaplanet. I continue to be. I was a buyer again in the 180 area right down here. So I just added, but I was going to do that anyway. So nothing has changed. And if we keep going lower, my next point down, well, it doesn't matter. I'll just be adding anyway. And other than that, okay, I'm done. I'll see you guys next week. And next week, I'll talk about the inside fibs and the logic that goes with that. So watch this video over and over again until you get my logic. You understand the basis I use on extensions and how I move it with the confluences of support, resistance, symmetry, geometry, and I build a map and a plan and just use good trading logic. Buy low, sell high, buy low. Anyway, have a good week, and I'll see you in the next video.